Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Friday, April 23rd. It is 6:50 as I'm starting the video. Taking a quick look at futures. Oil up 0.5%, copper up 1%, gold and silver mostly flat, and we're seeing a little bit of a bounce in equity futures. ES and NQ up about 0.25%, and small caps up about 0.75%. It's interesting to note that yesterday both corn and wheat were limit up in Chicago. We've been talking about the futures in grains and all things commodities, and that's another exclamation point on the commodity front that continues to grind higher. I will have a commodity overview for you over the weekend, and we can see, take a look at things, assess where we're at on those charts, and see if we can get entry points for those of you that aren't in already. Okay, so yesterday we had President Biden announce his bold climate initiative. That, of course, gave bounces to solar, EV, battery, that segment of the market. But then in the afternoon, of course, you got to pay for these bold, proposals. And his proposal is to essentially double capital gains taxes on those making over $1 million. And I want to remind people that these are just proposals. The president doesn't write the laws, Congress does. So, who knows where climate initiatives and taxes go. That'll be a negotiation in Congress, and we'll just have to see. But that tax proposal, of course, did have a negative reaction on the markets. And the thing I want to say or remind people, as you're actively trading, this doesn't apply quite so much to longer term swing traders. But if you're an active trader during the day, you've got to have a stop in place, because even if you're watching every single tick, every single bar, when something, like this happens, that bar, you can't even think that fast. By the time you reach for your mouse, you're dead, because you don't know what's going on, and the algos just hit it so fast. So as you're, you got your 1,000 shares or whatever, it doesn't really matter what your account size is, because, $500 to a guy that has $10,000 in his account versus, $5,000 for a guy that has $100,000 in his account. Both of those hurt in the same way. So it doesn't really matter how many shares or futures you're messing with. You got to have an actual order in there, because when they pull the rug that fast, your stops will be hit, and then you can breathe easy, because once you get behind the curve, that is, that panic mode of hitting a market order when the bottom's falling out, number one, you're going to get a horrible fill. And number two, you will have already lost a tremendous amount of money in the blink of an eye. So, and it's an example of what can happen just that fast. So, no matter what you're doing, make sure you have an actual stop in place in your platform, so that when that happens, you'll be taken out, which is what you want when they pull the rug. Okay, so let's jump into SPY. It's amazing, you do this long enough, And it's really interesting, where news and things happen. We had said 416 was a pivot, and it had stayed there, 6 hours, and then they pulled the rug right at that level. And what I've done here that's different from yesterday is I've boxed in this trading range from 416 to the lows of 410.50. So that's 550. So on a break of 410.50, you'd be looking for a measured move of $5.50, which would bring it down, into this range. And probably at that point, you'd probably tag the top of this gap, on a momentum overshoot. We do have this trend line coming in that comes in around 409. So really, I think the key level is 410.50, and that is the level of these prior lows right here, and we made a reach for it yesterday, didn't quite get it, but right there. So 410.50 is, marks that prior low. You don't want to see price go below that. Even though we've got uptrend support here, I think if that broke, I think this little trend line would break as well. You might get a reaction there, but I think in general, if this structure here breaks to the downside, I think you're going to be in here in the 404, 405 area. Taking a look at the 30-minute chart, what I've done here, notice it stopped right at this gap that we had marked from the other day. And, the quick plunge down made a reach down here to 411 before we got the bounce. What I've done is put on the fib retracements, which is something I always like to do when there's, a fast drop like that, to see where a reaction bounce might fail. And I think the key spot is at this 50% halfback at, let's just call it 414. I mean, if you really want to get down to it, it's 418.90. But let's just call it 414 because it's not gonna be exact. So we come down, we bounce up to 414, and that might be a place where it fails and it comes back down here for a check of yesterday's lows. And if we go into Friday and things get squirrely, then you've got to look at this 410.50 level that we just talked about as a place to definitely hold. And if it doesn't, then we're down into 409 and 407. So, I mean, as far as the long goes today, if you want to actively trade it, if we came in here in the morning, early in the session, got into the 411.50 area, you could take a long against that level and then try and get a bounce up to 414. Or if the bounce takes us above 414, recapturing that level, then you could get long there and look for 416 on the top with a stop right below. So those would be the key locations. I really think that 414, since we're up a little bit on futures, I think 414 is going to be your pivot. Okay to be long above, but be careful for the downside if we see this bounce stall into the 50% retracement zone. Qs, 2 hour, again, we had the upper range pre-identified here. stopped right on the dime. They pulled the rug, and again, we came down to reach towards the top of this gap at 333.74. I think this one is simpler than SPY just for the following reason. We've got the gap to shoot against. As long as the top of the gap holds, I think you can be long. Looking for a bounce into 337 and possibly, back up towards yesterday's high. But you break into the gap, I think that gap's going to fill down to 331.62 and probably continue right on Friday afternoon down towards 329, and then there's another gap at 327, and that's, we've got an uptrend line coming into this zone here. So, we always say, that Friday afternoon from 2 to 4 is really the most important couple of hours in the week. Why? It's a measure of risk sentiment going into the weekend. Are people bold? Are they not afraid to put risk on over the weekend? What could Biden come up with? What news is going to break over the weekend? And do I really want to be out there with that risk? Or do people say, yeah, I'm going to take that risk. This is a good spot to get long. I'm going to get long and, finish strong into the Friday. That would be encouraging for next week. So the nice thing here is we've got the gap and it's clear as day. It's been holding, tagged a bunch of times here, tagged several times here, tagged yesterday. So that's the level that has to hold. Let's take a look at the 30-minute chart. You can see it here a little more clearly. I've put the half-back fib level here, which is at 337. Same kind of thoughts apply that we talked about on SPY. You can be long against the gap here at 333.74. We go down here in the morning and it holds. You can get long there, but be ready at 337 because that's your halfback entry for a short, right? If it takes it out, then the door opens up for 339, 339.50, yesterday's highs. But that would be a place where you should be ready for a rejection at that halfback level. So I think for this morning, you can stay long against the gap, but if it fails, then here are the levels on the downside that you should anticipate and target your trades around. IWM, really interesting yesterday. We got the break above 223. We talked about it at the midday on the midday note. From a technical perspective, it worked perfectly. We had a soft opening. We recaptured that well-defined level that we talked about, and we got a $2 move up to the top of the range, which was rejected, and then back down towards 223, which failed. We went down to the trend line, bounced back up to 223.19. So for today, from a technical perspective, absolutely nothing changed. On a break above 223, you can get long and look for 225, 225.50. But as long as we're pinned below it, I'd be real cautious. You've got a level here. You can see you've got support in here. It's 220 level. If we came down there, I think you could get long against this downtrend line and support here and look for a bounce to 223. But you get on the wrong side of 220, then you got to start looking to 218 and 216.50 and then 215 on the downside. So those are really the key levels, 223 and 220. Above 223, you can be long. Below 220, I think you can be short and looking for a move down if it gets soft this afternoon. Here's just the expanded view of that. And you can see pretty clearly the levels here. But look at how well the technicals have worked on IWM. Here was the break above 223 into this resistance zone where it was rejected and back down to 220.50 and then back up. So anyways, that one's pretty clear on where you can shoot. Okay, this is the point where I like to encourage people, if you're new here, thanks for checking out the channel. I hope you've appreciated the levels. I think they'll help you in your trading. I'd encourage you to subscribe to the channel, hit that alarm bell and the like button, and that way you'll get all my content sent directly to you and you won't miss a beat. Over in the show notes, there's places to register with me. That way you'll get content morning, noon, and night when I send it out, not just on YouTube, but other notes during the day, midday updates, etc. And you can also check out the website for helpful articles for aspiring traders at all levels. And of course, longtime listeners, thanks for sticking with me. I really appreciate it. Hit the like button and send that link along to somebody in your trading circle. Make that little extra effort for me. Help me build the channel and build our community. That would be great. And encourage your friends to stop by the trading room. We'd love to have them join us there. So let's run through FANG real quick. They were pretty weak yesterday. Facebook, it's a bearish setup. Bearish RSI regime below 50. Bearish PPO below the zero line. Bearish price action below a downtrend line, below all the moving averages. You know, this thing's got to get above 298 and pop this downtrend line to really stop the bleeding. Otherwise, not a lot stopping it to 294. And really, if you look at the volume over price profile bars, this thing could easily see 289 right here. So on the long side, I don't think this is any place to try and be a hero, to be honest. You've got to see something positive, I think, in order to get long. And I don't see anything close by to give us that other than, breaking above this downtrend line. That would be a start. But you've still got declining moving averages and you're still below that prior breakout level. And remember what we always say, once you break out, you don't want to go back into the range, because that's a bearish move. And all these people that bought over 305, now they know they're wrong. And whether they're holding on to their positions or not, there's a motivation to sell because they've lost money. So you really, in my mind, got to recapture that breakout in order to have a real confident long, or come down to a big level, this 289, where you got this big volume over price bar, where you can take a stand and say, look, I'm playing for a bounce at that point, and maybe it'll turn into a trend reversal, but at this point looks pretty weak. Apple, what I've done here this morning is box in this trading range from 135 down to 131.50. You see the support level, 131.50. support, support, support. You got to hold 131.50. If you don't, then you're probably just on a measured move basis. You're coming down here to this gap at 128.50. So as far as a pivot point today, I'd say 131.50. You can stay long against the low, but if that breaks, then you got to flip the other way. You've got a level here at around 130 that could hold, but given the posture of everything, given the width of this trading range, I think if you break 131, I think your target should be the top of the gap at 128.50. Tesla was rejected at the 750 level that we talked about yesterday. Came down, actually lost that 725 pivot that we had. So now, as long as price stays below 725, I think your target is that window between 707.50 and 710. That's got to hold. If that can't hold, then your target becomes 670, and this whole breakout looks fake, right? The breakout was above 710. You lose 710 on the downside, then you're back into the range, and that's bearish. And it's interesting to note, I think Tesla's earnings are next week, but we saw a lot of bounces in the EV, green energy, green space on Biden's climate proposal. Tesla was down 3%. It didn't participate, with the NEOs and the battery names and all that, solar names and all that stuff. So that was kind of interesting to me, and probably not very inspiring to the bulls. So anyhow, focus on 725 and 710. Microsoft, bad day at the office. Got rejected here at 261, and notice where it stopped. The other day, we had the lows against the top of the gap. Yesterday, that gap filled down to 256. So for me, it's pretty simple. 256 is your line in the sand. You lose 256. 254 is your next stop. And most likely, I would say the top of this gap at 252 would be the place where price would go. And yeah, you don't want to see 256 go. You want to see that hold. So that would be a place where I would be keying off of today. And even for longer term traders, that's going to be an important pivot down the road for next week. You want to see that hold. Otherwise, you could come back and end up filling this gap down to 250. Amazon. The free 50 club worked again. We were above 33.50 yesterday, and then when it broke, you got a flash move down to 3,300. You would have had to react like lightning to get that one. But it still goes to show how important these $50 levels are, because, once that went, price knew exactly where it was going. So it's pretty simple here today. 3,300 is your pivot. Above that, you can look for 3,350, and below is a gap. And I didn't mark it on the charts, but I have it right here if you want to get a pencil. 32.93 is the top of the gap, and 32.79 is the bottom of the gap. So 32.93 to 32.79 is this gap. Those would be the levels where you could get, an undercut of 3,300. and then a bounce at either the top of the gap or when the gap fills. We'll just have to see what the price action looks like. But I want you to take notice. Bearish RSI regime and bearish PPO regime. Lower highs, lower lows. Downtrend situation. So in order to start turning things around, you've got to have a higher low and then a higher high, come down here, find support, and then reverse. But as it stands now, this looks like corrective activity, and, we may have further to fall depending on, the broader markets and all that kind of stuff. Here we said stay long against 2270 yesterday. Of course, with that rug pull, price went right back to this large volume over price bar right at 2240 that we had marked, pre-marked. That's your pivot now. Above 2240, you can be long and look for 2270. To kind of recapture the breakout, you got to clear 2270. Again, not really a very inspiring RSI profile with momentum coming out and now RSI pinned under 50. And you've also seen PPO make a move below zero. And so that's not really very inspiring. But price has held the key level, and that's 2240. You get below 2240, you've got kind of one last chance here at 2230, but then below that you're going to go to 2200, and then that truly is the last chance because there's nobody home below 2200, and that was the big earnings move from last time. I don't know if that was earnings or not. I don't think it was, because earnings should be coming up. But anyways, that big impulsive move, very few transactions over here. So below 2200, if that were to happen, that would, even if you've never traded Google, that would be a place where you'd anticipate that these gaps get filled down here below these support bars. Netflix, we know, had the big rug pull on earnings, creating this bracket, and we've got a support level both at the 200, 503, and at this prior low down at 500. And took a look below yesterday, found support there, and bounced back up. Don't forget we've got a gap here from 515 all the way to 547.50 that will eventually get filled. So you can, be long against the bottom of the range here and look for 515. If you get a break above 515, then you're going to be in open air in this big gap up here. And one last chart to show you is the solar ETF TAN. This is a basket of solar names. And I was taking a look at the sector last night and saw something kind of interesting here I want to pass along. Weekly chart, massive volume over price support bar here. Big run up, 38% fib retracement, where for 8 weeks in a row, it has probed 85 and held every time. Right here. See it? Got overbought. 38% pullback. A lot of buyers stepping in at 85. And if you wanted to take a shot on the weekly time frame against 85, I think that is a viable and very objective trade to take a shot long. just because of this volume over price support and all these locations with wicks on the bottom. You know, they sell it down and then they buy it right back up to 85. At least you've got a line in the sand. It's clear as day. And remember, this is weekly closes, so you could have a close, you know, on a Wednesday afternoon below 85. That's, you know, that's not a sell signal on the weekly chart. It's only weekly closes that matter. So, I mean, it's still pretty tight, and RSI is hugging 50 right here. But anyhow, very objective. You know, price is off. You know, 38% back on this from this fib level. So, yeah, I think if you were looking for an objective long, I think this might be an interesting place to take a shot. Of course, everything depends on your view of the broader markets. You know, if you're bearish on the markets, then, you know, don't take it. But if you think this is a dip to buy, then by all means, you've got an objective long right there. Okay, let's wrap it up, guys. Remember, Friday afternoon, really important for risk sentiment. Let's watch how these little bounces are digested by the market. Watch your fib levels. Watch that 50% halfback and watch the prior lows, because that's really going to be your go, no-go level. If we break prior lows and you know, lose that support level, then we could have a weak afternoon, and that would probably bring in more sellers. So let's stay on our toes. And last reminder, weekly option expiration. Make sure you check all your positions and don't get any surprises tomorrow morning with assignments because you forgot that you had a position on. Okay, this has been Chris Butts with Traders Profit Compass. Have a good day of trading. Talk to you soon.